Welcome back to another technology trade video. In this video, I'm going to go over the technical analysis trend line. Now, all a trend line is a line you draw from either high to high or low to low that sets a trend. So here, for example, I'm going to take this low here. Back her out. Come to trend line. Gonna go low, and I'm gonna go to the next significant low. Just swing it out to this low. And that gets us a line there. And as you can see, this isn't a great trend line because we don't have a lot of touches, but it never crossed below this. Now you can do trend lines, same thing on the top, go from a significant high to another significant high to set a trend. You can also do it high to high. So all these do is trend lines. They give you just an idea for inflection points in the market. So as you can see, this was an inflection point, this was an inflection point. Here, this trend held true. At first, we got resistance at the trend, but it didn't make it much lower, and then it broke through, and then we got support at the trend. So in this case, here at the trend line, you can see after we got this support, this would have been a good time to go long. And here, when we got the resistance, it would have been a good time to go short, but we fell right into a lot of support. So trend lines are nothing solid, nothing written in stone. It's just a visual indicator to help you understand what is going on in the stock market. Now you can see all of these trends over the past couple years have been going up, but now we're getting lower highs, so we can draw trend lines that are now trending down. So this is it's just an indicator to help you see the overall flow in the market. Now with trend lines, if you wanted to just do a straight horizontal trend line, then you're going to need the price level. And this will just draw you a line straight horizontally across, and as you can see, this is perfect for, like, let's say right there. So that was the start of this gap here, and as you can see, after all this time, that gap is still holding up. So that would have been a good price level to draw in. So these are all just visual cues, like I explained here. It's not immediate, but over a longer trend, you can see where the market wants to go based on trend lines. So here, I wouldn't have done anything until we got this double bounce here. You know, we went above, failed, but then held the trend line, went back up, failed, held the trend line, and this is a really strong confirmation here for me, because not only did we hold the trend line here, but we also held this low, So that's a strong confirmation that we're going up, and as you can see, the next couple days we went straight up from there. Alright, that's just the basics on trend lines and price levels. Very simple indicator to use. You can either go significant low to significant low, significant high to significant high, or, you know, just do the swing out method. Start with a low or a high, and then just go until it hits something. Here, you can see there's not much significance to that. We're nowhere near. So, here, if I were to go and just swing it out to next one, that's a nice line. You can see it has some gusto to it. And I know this is really messy and out of control, but when you draw multiple trend lines like this, you can see high probability inflection points. When multiple trend lines line up, you're going to have more power than just a single trend line lining up. Alright, that's trend lines and price level lines.